Hey everyone, welcome back to another Stock Market Open live stream. Boy, Donald Trump on Truth Social is now arguing that, well, the stock market is discounting his win, essentially pricing in a Donald Trump win. Really interesting. It's probably more likely the stock market is pricing in a decline in inflation and interest rate cuts, but I have to say, branding, I thought it was funny when I saw it. And who knows? Maybe to some extent there's truth. Who knows? After all, it was posted on Truth Social. So then, this morning I was reading on the Financial Times a few different things, not only about the global economy, but also on inflation. Let's start with inflation because I think it's most interesting. Let me make sure the audio's good. Yep, we are good. Okay, perfect. So let's see here. Inflation. Oh, I have it saved right here on purpose. Okay, yes. So I thought it was very interesting. They ran the headline in their central bank section. The Fed's battle against inflation is almost complete. And there have been no moves so far, but they're basically saying in the U.S., officials must feel they're almost within touching distance of immaculate disinflation, the elimination of rapidly rising prices without an economic downturn or any meaningful rise in employment. And they basically look into PCE here, but there is this... this specific quote that I thought was so interesting is they pull out Chris Waller. They specifically say right before the Fed's blackout period, Chris Waller left everyone with one little last message from the Fed. And that was, quote, "It's almost as good as it gets, but will it last?" I'm like, wow, that's a pretty interesting little final pickup there from the Financial Times. But fascinating. And I do think there is, I've been of this mindset for a very long time that it is not surprising that we should see this more rapid fall in inflation, especially as hopefully we continue to see this rollover in not only the lagged insurance, but also housing inflation. And housing we've explained a million times before, but insurance not so much. I think people forget that insurance is a very funny beast. Not only do you have to wait for costs to go up, like underlying costs to go up for insurers, medical costs, car repair costs, home building repair costs, but after those costs go up, then you need about a year to actually turn people's insurance and renew them at higher rates. So there are some real challenges with actually raising insurance rates. So that's why we're seeing this lag in auto insurance and health insurance. So that's at least explainable, right? So that's a good thing. Now, where does that leave us? Well, we have this, other idea that the International Monetary Fund is now raising a European and as well as world GDP outlook, raising European outlook because you've got countries like Italy and Greece outproducing countries like Germany. Now, in fairness, and this is I don't know this with certainty. I always like to try to disclaim my opinion. My opinion on that is potentially having to do with travel. I'm not sure, but Germany is a very manufacturing economy, whereas I think Greece is going to be a little bit, even if it's just on the margin, more exposed to services spending from consumers traveling there, especially potentially wealthier American consumers traveling to Italy and Greece. After all, you go to Venice and it's it's this sort of like it's like an American shopping mall is what it's turned into. It's wild, and the only thing that keeps the economy afloat, almost quite literally, given that it's like this little floating platform, is tourism. Anyway, IMF raised its forecast for global growth on a better expansion, and this is now global, in the U.S. and on fiscal stimulus in China. I always think that's so interesting. They keep talking about fiscal stimulus in China, but it's never enough. It's just never enough. And so, once again here, after being down 58 bips Alibaba down buck 47, well, 157 bips. And then K-Web's down 257 on yesterday, and then 2% here in pre-market. Every time I see, oh yeah, more stimulus coming to China, it's always eventually followed up by, but not as much as the market was hoping. China's a really tough one. I think, China is this beast where we should be seeing substantially more government support. But I want to know where I read this. It was either The Economist or Foreign Affairs. There's this idea that the more China potentially stimulates, the less party control they potentially have. Which is also quite fascinating, that this sort of Chinese Communist Party might be purposely giving the country, almost alluding to the country as a baby, just a little bit of milk at a time to keep their power at max thresholds. I don't know. It seems weird and funky. All right, whatever. So, all right, let's go see. We'll take a peek here what we've got. I wrote down a few other things I want to see. We've got, let's find out here. Oh, of course, Iran once again calling for diplomacy. We'll see what happens with that one. And I suspect there'll be some form of retaliation here from the Biden admin, though my enthusiasm for the efficacy of American responses in either the Red Sea or the Middle East has been very well, how should I say, it's gone down. It's apparently been a little less functional than we had hoped. So then the Journal also had a piece on fewer workers are quitting, a sign of confidence. The labor market is falling. I'm going to be very clear about that. When less people are quitting, it's a sign that people feel the labor market is more challenged. And so seeing that quits come down is fantastic. I think we have JOLTS this morning. Let's see here. JOLTS. Oh, I should just do this, sorry. All right, let's see here. Farmer Brett, what's up, man? If you don't have assets, you will always be poor. The stock market is where the haves and have-nots separate. Yeah, and real estate. Real estate and stocks. But yes, assets. Which really, think about this practically for a moment. Stocks are nothing more than a share of a business. So actually, you should say real estate and ownership in businesses. Those two things. You could get into like bonds and debt and stuff like that, but I don't think that's like for somebody who's not an investor, trying to sell them the idea of bonds, I think is next to impossible. I understand if you're retired, it's going to be easier, but for somebody trying to build their wealth, ownership in business, real estate. By the way, before I get to the eco data coming here, SMCI. Oh my lordy. What I have to say, what was wild about this was, and it actually kind of made me want to do the stock market close again. I was watching this, and I watched the earnings come out yesterday on SMCI. They came across the tape, and we were right, I'll show you, right here. So the earnings came out right about here, where these little red lines are. And I'm like, man, this is such a good beat. Why is the stock not moving? It literally wasn't until CNBC covered it, like 4 minutes later, that the stock started rising. And I'm like, you gotta be kidding me. So, yeah. Wow. I guess there might be a little bit of an ARB opportunity if we bring back that market close. Gee whiz. But yeah, SMCI killed it yesterday. Again, reiterating this NVIDIA and AI strength. I mean, NVIDIA's up 30% this year. You've got this stock now. Once we broke out of 500, we crossed to 600 very rapidly. But where did we stop? Well, next fib is 731. This is just nutty. Jump into AMD over here and pre-market, slightly red though. Okay, let me hit that data. Let's see here. The rich get richer and the poor get poorer. That's how prices can go up. Not a judgment on the rich. I think you're talking about stock market prices. Cybertruck Stroner. Yes! Yes! I got this as a gift. Go check out my Cybertruck review video. And you could see the YouTube channel of the person who gave it to me. They were so nice to bring a Cybertruck out here. Real estate and farm ground. Heck yeah. See, I like how you said farm ground because I don't like land. See, but I like farm ground. I'm okay with that. Big JOLTS miss, 100% March cut. Yeah, it'll help. Isn't it? What did it? When does it come out? Oh, it's 7 a.m. Oh, how boring. Okay. When the 10-2 uninvert, will stocks go down if we are in a job recession? I don't know, man. I have no idea what's gonna happen. I mean, I'll give you my opinion. Like, obviously, I don't know with certainty what's gonna happen, but my opinion is Nike swoosh, baby. People are gonna be so mad at me. Like, how is it possible? I'm like, bro, history. And what? 1982, bro. Compare the Nike swoosh of 82. Have you not you've all seen this? Come on, y'all know this. Okay, all right. I'll pull it up. DJI 100-year chart. That's not to be confused with the drone company. That's the Dow Jones. All right. There you go. 1982. There it is. 1982. Look at that. You literally went through the 87 recession, these pullbacks, this volatility over an 87, or sorry, the 89 recession and the 87 crashes. You went through the 90s soft landing. You went through the dot-com bubble. You went through the Great Recession. And all of it, literally for 40 years. 40 years. There was a volatile Nike swoosh. Whoosh. And where sit we today? The tip. It's insane. It's insane. Are you going to cover Enphase earnings on February 6th? Only if they beat. Kevin's going to be a sponsor of Nike in a few years. Yeah, Nike swoosh is just a chart pattern. What did Schiff say? Did he get BTC yet? Yeah, I mean, we've got to edit all these interviews we did. Honestly, we've got some phenomenal ones coming with Valuetainment, Schiff, Harry Dent. But I'll save the surprises. But it's very entertaining. So, okay. Now, I want to see the FOMC rate monitor, and then we'll look at JOLTS. Okay. So, we have... That's funny. Still at 49.1% on a March 20th Fed here. You know, actually, Bloomberg Intelligence, no, it was Bloomberg Economics, I think it was yesterday. They had a piece where what they did is they fed 40,000 Fed headlines into a neural net, basically a language software. And they keep changing this headline. It's annoying. It was either 40 or 60,000. It doesn't really matter, though. They fed a bunch of headlines in covering 6,200 speaking engagements since 2009. And the model is basically trying to understand when the Fed is getting close to imminent rate cuts. And the model needs to be under... this is very interesting. The model needs to be under 0 for rate cuts to be imminent. They think that the model is telling us we should expect rate cuts in May. But I also think this model could be heavily influenced by what ends up happening in... How do I do this? Okay, there we go. Oh, interesting. Anyway, they think this... I'll just share a screenshot in a moment. They think the model suggests the Fed's going to cut in May. I think that the most valuable of this Fed speak is actually going to be in January here. And Jerome Powell will tell us if it's going to be May or March. And so, as you would expect, the most recent Fed speak should be weighted the most. So, like, I personally don't think it really matters to go back to 2009, but the reason they do that is just to sort of understand how the Fed communicates and then what it ended up doing to backtest, which is fine. I think it's a cool experiment. But here you go. Here's what the chart looks like. Fed sentiment. So when the line goes under 0, you're close to imminent cuts. And you could see the collapse over here really since December, which is when they basically U-turned on how they were communicating, which is the same thing they did in December of, well, it'd be more like over here, December of 2021. Although look how that started a little bit early. That would be interesting. It almost makes you want to, you know what? This is like right around, I feel like when the Fed started saying, oh, we're going to ban ourselves from trading stocks, which they just happened to conveniently right before they crashed the market. I'm sure there was no coincidence to that. That would be jaded to think that there was. So, Kevin, how dare you even suggest that? Anyway. So, for JOLTS, we're expecting 8.75 million job openings. Personally, I want to see like an 8.4 handle, which would be, you know, like a 5% decline on the month. So, I would love to see that. Yeah. Somebody's talking about looking at option Greeks on a specific ETF. I would highly discourage you from doing anything on something that has less liquidity in the pre and post market. It's always wrong. Would you rebalance NVIDIA and AMD? There will come a time for that. And the beautiful thing about trading within an ETF is that you can basically 1031 exchange. So like if you bought NVIDIA for $300 and then you sell it for $700, literally sell it for $700, you could pay 0 taxes under an ETF wrapper because you hold the ticker. And then you do what's called a custom basket exchange within the fund. It's insane. It is the greatest tax hack in the world. Tax hack. That's it. New startup tax hack. Yeah. Yes. Why is Tesla going up? Well, because this is how it works. And this is, I mean, I'm not trying to like pat myself on the back, but we've talked about this. We talked about it before earnings too. Tesla goes down leading into earnings and coming out of earnings. Almost always. And then when does Tesla go up? Between earnings periods. And sometimes it actually, I mean, it used to. It's been a while. But it used to get into these 21-day cycles. And I don't know if we've had a 21-day cycle recently anymore. Let's see here. Somebody's saying Pfizer, Kevin? Ew, gross. I'll look at it in a sec. So, last 21 day, yeah, we haven't been really that good at actually having a 21-day run on this, mostly because the past 3 years has been down. But it used to have these 21-day runs. It's kind of crazy. Yes, so I am saying everybody should eventually have their own ETF, but it's impossible because it costs like 500 grand a year to have an ETF. So it's like, quite frankly, there aren't enough taxes to be saved. The costs of an ETF are very prohibitive. It doesn't make sense. Anyway, Tesla up 4.19 yesterday, 2.1 here in the AM. Yeah, this is just very normal. And the fact that we basically perfectly bounced off of our, you know, I mean, we didn't even get into the 170s. So we people pre-traded, right? I mean, this is so obvious. Come on, folks. This is how it works, okay? If the support line is 175 or 178, where do you put your freaking trade to buy it? If you're a trader, you set it at 182 because you got to play eBay, okay? You play eBay. You're not going to go 180 because everybody's going to do 180 because duh. So you're going to go 181, 182. Sure enough, that's where you bounce. Okay, great. Fantastic. So, now you're just getting trader movement. Tesla's not trading on the real discounting of the true fundamentals of the stock. Because you could discount Tesla solely on car sales with essentially no FSD conversion, and you're still an over $400 stock, you know, within 2-3 years. So, and that's including, you know, no Optimus or semi-truck or robo-taxi or whatever. Oh my gosh, this was funny. You want to hear something? Kathy Wood, when I was when I had brunch with her a couple days ago, she said, I don't know how this came up, but she was talking about being in an Uber, and she, when I get in an Uber, I tell the Uber driver that they need to start buying Teslas because robo-taxi is coming and robo-taxi is going to replace them and they need to buy Teslas. And how are they going to afford that? It's like, they need to form a union of Tesla owners and own the assets. And I'm like, now that is something I want to see on camera. Kathy Wood getting into an Uber, lecturing the Uber drivers on asset acquisition. I told her that too. I'm like, Kathy, now that, I want to see that because that is so you. It was great. Oh, man. All right. Where were we? So let's hop in over here for a second.
Because that's already come and passed.
I don't know where you get that number. The entire tax bill alone is $78 billion. Well, it's only $78 billion is the entire tax bill that covers. Well, I'm talking about what the bill does. And you can't go back 10 years. That's not, in fact, what it does. This bill provides for working families, small businesses, and
there's not
we have
anything retroactive for tax investments that were already made in 22 and 23?
No, there's retroactive in regards to R&D, making it 100% with expensing and the interest deductibility provision.
Why is that incentivizing additional business incentives? I understand your point, but let's cut through some of the big talking points and really get down to the issues here.
I love Becky.
That R&D being fully expensed will help with future issues, but not retroactively. That's already been done and paid for.
Yep. There's a lot of discussion in regards to whether you should do retroactive activity or not. We're in a very divided government. Democrats control the Senate.
Bro, this guy's, come on, man. He's punting, bro. She made such a good point. She's like, wait a minute. That money's already being spent. How is giving tax breaks to last year? You know, I'll take them, don't get me wrong. But how is that benefiting the future? I don't know.
Back in 2015, in order to make law in regards to tax policy, you have to make sure Republicans and Democrats will agree on it, and you're going to see a very high vote when this is taken to the floor.
So let me ask the kind of.
I like his like slight forward lean, like he's just mad at her.
GOP critics who said that they weren't consulted on the negotiations. One person was pretty vocal in what he said to Axios, saying, I don't know who the F he's dealing with. How does Jason Smith announce the deal before the speaker knows about it? He negotiated this with the Senate and the Dems. Is this more of the same of what we've seen with just the overall Speaker of the House having so many problems trying to keep things in line with a very thin majority?
Those are just distractors. This bill started from the field hearings that we had at the very beginning of the year in Appalachia, in Yukon, Oklahoma, and Peachtree City, Georgia, where we heard from real small businesses, working families. We developed that tax package in June, passed it out of the committee in June, and what was passed out of the committee in June is what we used to negotiate. We had 171.
This is such a waste of time. Freaking morons. Oh, God. Politics, man. Oh, boy, I can't handle that. Kevin, can you do a collab with Patrick Bet-David? Yes. Probably post it Sunday. UPS cutting 12,000 workers, Max? Dang. Here come the job issues. They're coming. It's like have you ever played Plants vs. Zombies? It's like that, okay? They're coming. UPS to cut 12,000 positions. Well, how many workers do they have? Like 100,000? UPS. No, they gotta have more than that. How many? Let's see. How many? 536,000. Boy, I was off by a factor of 5 on that one. Holy smokas. 12,000 divided by 536. Wow. 2.2% reduction. Now, again, like, yeah, they have a lot, but then again, 12,000 is also a lot of people. Wow. That sucks. That's pretty wild. Ay. Okay. 12,000. All right. So let me see what they write here. That's about 2.2%, $1 billion cost reduction. And then we have, this comes right on the backs of a union deal. Right after the union deals. No way. Let me see what the union deal was. UPS union. Let's see if we have it. UPS negotiated a historic contract. Oh God, hello. Speak better, Kevin. Let's see here. On July 25th, the Teamsters Union reached a tentative contract securing wage increases for 340,000 workers. There you go. There you go. That's how it works. They always do it. They always do that. It's not a surprise. What was that? Just about 6 months ago. Yep. Throw that in there. So I wonder how much of an increase that was, because if we compare those two things, how much was the deal? Disruptive walkout. They have to file their ballots until August 21st. It was a 5-year agreement. $21 per hour would be raised to, the minimum wage would go up to $21. Okay, so basically, this is for 340,000 workers. Oh, see, we could do the math on this. 340,000 workers, minimum wage up from $16.60. So 21 minus 1660, bro. Okay, 21 minus 1660. There we go. $4.40 times, that's per hour. So assume somebody works, 40 times 50, 2,000 hours. Okay, so 4.4 times 2,000 hours times 360,000 workers is $3.1 billion. Okay, that's very interesting. Let me just make sure I have that right. Yes, $3.1 billion over 5 years. Now, they just cut $1 billion for the next 5 years. Oh, dude, they're up. Oh, my God. Holy smokes. That's very interesting how they pulled that. Wow. Yeah. Yeah, there's your historic contract. UPS makes out again. Yeah. Oh, yeah. Top pay scale 43 an hour. Yeah, I mean, I guess that's true too. You know, we are calculating off basically the bottom, assuming well, that was part of at least what they were talking about in terms of where the big increases was in pushing up the bottom basically. Let me see if there was anything else in that. It was 3. No less than 21 an hour, below our expectation. I don't know how much of a top line upside there was. Whatever. All right.
1,000 jobs, seeing a $1 billion cost reduction. UPS is also requiring all employees to be back in the office 5 days per week this year. In other headlines, the company says it is exploring strategic options for its Coyote truckload brokerage business. That 12,000 jobs looks to be a bit over 2% of the employee base.
And a busy few days still ahead for the markets as investors brace for big tech earnings and the Fed's latest policy decision. Joining us right now is John Mowry, who is Executive Managing Director and CIO at NFJ Investment Group. John, what do you want to hear from the Fed? What do you want to hear from earnings? Which one is front and center for you this week?
Good to see you, Becky. So I think, when I look at earnings, I'm not as worried. I'm expecting those to be pretty sanguine. Valuations are stretched in big tech. I think what I'm really keying off is what is the Fed going to say? If you look at that spread between the 2-year bond yield and the Fed funds rate. That is very stretched. In fact, we're in the 13th month where the 2-year yield has been below the Fed funds rate. Why is that important? Because the 2-year bond yield is telling the Fed it's time to cut. And if you go back historically, we're in the second longest yield curve inversion. Those things typically can be problematic. So I'm looking for the Fed to use language that could give investors some relief there. And I think that that's going to be a potential real boom for real estate, banks, and some of the smaller and mid-cap stocks.
Okay. If you don't get that, then what?
Well, if you don't get that, I think what's interesting, Becky, is that you've been paid to avoid some of the more defensive areas because of higher interest rates. So if you look at utilities, if you look at staples, if you look at healthcare, all of these higher yielding areas have been hollowed out because you've been paid to avoid them. Everyone's been chasing the Mag 7 and the AI trend, and then they're clipping coupons in fixed income. That's created a real opportunity in the more defensive areas. So should you get a bumpier period in the market, I think that you'll get paid to be in those other areas. So I like some of the more defensive areas. In fact, Becky, if you look at the spread between the cyclicals and semis and the more defensive areas, you have now surpassed where we were in 21 when those spreads got very stretched before a challenging year in 22. So I think investors would be wise to rebalance out of some of these areas that have run and move into some of the areas where you've got much more attractive valuations, very healthy dividends, and dividend growth. No one talks about dividend growth, but that's a key way to ward off inflation.
Yeah, it's interesting, John. It seems like the market has decided that the biggest tech stocks are defense as well as being offense, and so the traditional defensive have not worked as well. I was looking at consumer staples in particular, very low valuations relative to their history. But do you need a story fundamentally for why things are going to work? People don't think there's pricing power, et cetera.
Well, I always start with valuation should shape investor expectations. I mean, the Mag 7 got just tremendously cheap. Okay, Nvidia was down 67%, Facebook or Meta was down 50%. Those names got really attractive. So I think that you always should start with valuations. But I expect that as inflation begins to moderate, that's going to be a way that these staples have some alleviation on pricing power. In addition to that, if you look overseas, a lot of these staples have exposure to China, some of the European markets. Those have been weaker. Should you see a bottoming there, I think that's also going to alleviate some of the pressure on the staples. So I think all those areas are places investors should be looking in. They're not as exciting. The hare won the race last year. It might be turtle time.
Turtle time.
Yes, tortoise time. Yeah.
Here. John, thank you. Great to see you.
Thank you.
Big pricing power. Yeah, you gotta be careful. Like, I think a lot of the staples are gonna get whacked, though. I don't think they have pricing power.
And Mike, thank you
All right,
for being
see you
here
soon.
today.
Thank you.
Yeah. We'll see you back here soon, too. Right now it's time for Squawk on the Street.
Yeah, okay. Transitioning to Jimbo, whatever. So 1 hour to JOLTS data. 1 hour. And JP Morgan warning of .com style bubbling up in the top 10 U.S. stocks, nearing the 2,000 peak. I'll show you this chart. It's actually pretty neat. It's essentially a way of saying we are so concentrated in the stock market's gains that the concentration is starting to get eerily similar to what we saw in the .com bubble. So you can see here the ratio of the top 10 divided by U.S. mega caps, or the U.S. MSCI, which is everything. So basically, everything, or the top 10 divided by everything, and then as the percentage weight of the top 10 divided by everything goes up, it's more similar to what you had in the .com bubble. There you go. I don't know, man. Looks to me like we still got a little bit to go.
Revenue's down very big. I think UPS is in disarray. Not quite sure how to fix the situation. I don't think it necessarily affects on FedEx. Wondering with the Amazon impact, but
oh, by the way, I forgot to calculate that this the $3 billion in spending, if you raise everybody's wage $4.40. I realize that, and this is where it gets a little complicated. But if you raise everybody's wage $4.40, which would be like if you're making $36, you make $40. If you're making $16, you're making $21, right? Everybody's goes up $4.40 over 5 years. It's really in the 5th year when you get the full hike it would cost around $3 billion a year. But they're cutting $1 billion a year now, which they probably don't have the full hike in place now. So they've probably fully offset their costs with this cut for the next year. That's probably what they're going to keep trying to do.
Say 12,000 jobs, first real impact of slowdown of rates higher. I mean, a gut-wrenching decline, frankly, particularly for a unionized outfit. I look at this and I say, I want to know how much of it is lost business to FedEx, how much of it is what Amazon's doing. But I think what's most important is how much of it is just poorly run. I don't know.
Right. Operational challenges.
Operational challenges.
It does bring to mind the list of layoffs lately. I've been keeping one just recent. Levi, eBay, SAP, Salesforce, Macy's, Wayfair, Unity, and then a couple trimming at Alphabet and Microsoft. Jeffrey's actually had a note looked at, we got about a fifth of the S&P 1500 having reported already. And of those, 13% have mentioned layoffs in some way, which is up from the prior 2 quarters.
Right. I mean, we do have these companies that are recognizing, I think you'll hear this from Amazon, from Alphabet, you know what, we made some decisions, we had a lot of initiatives, and we decided to close those initiatives. And I think that is prudent, and the numbers go higher. Then there are other companies, like a Macy's, which is under siege from these, I don't know, these activists, where they're trying to take some action. And then there's companies that are just saying things are softer. But I'm not seeing lots of companies doing the latter. It certainly would make sense if things continued this way, but I'm not ready to wave a red flag yet.
Right. Journal's got a piece today. Fewer workers quitting their jobs.
Isn't that interesting?
Glassdoor had a chart yesterday looking at employee confidence in their job security. Very low. Right? Has really rolled over.
Is she Bain number one? Was Bain number one on that? I think it was very, very interesting. Like, wow. I mean, are we like no more public companies that are at the top?
I guess the question is, are you going into Friday's print with maybe eyes a little wider open?
I am.
You are.
I am, because when those are stats that say there's not going to be any increase of wages, people are happy to keep their job. I think that this is one of the things that Nick Timmer's piece really from the Journal. He's very good, and you know, yesterday was about there was a piece about disinflation. I think that we're now starting to see deflation.
I covered that disinflation piece yesterday. Y'all saw that.
Growth in pricing. I think we're going to start seeing deflation there. Things are going the Fed's way. The question is this a long enough window? I mean, if I'm Jay Powell, I say, you know, it's starting to go my way. Let's stick with it. It's working. But I think for Americans are worried.
Whoa, wait a minute. Remember, you can keep being Jay Powell by cutting. You can keep the level of restrictiveness the same tightness. I think that always gets forgotten. Like, doing the same is actually following inflation down with rates. That's doing the same, keeping tightness the same. Nobody's understanding that, and that's okay. I get it. And hopefully you get it. But outside, it's the same thing, literally, as people who think, and I see this all the time, I'm just like, oh my God. Every time. Like, I think I had a video, it was like on TikTok or Twitter or something like that. And so it's like, I don't know what you're talking about, man. Things are still much more expensive than they were in 2019. And I'm like, bro, how many more times do I have to explain this? Please. But anyway, so the same, like, that's hard enough for people. People don't even understand the difference between disinflation and deflation. Now, we got to convince people that the Fed cutting is actually them just keeping tightness the same. There's no way. There's no way. And in the meantime, stocks are just going to do this. It's the volatile Nike swoosh. But people don't get it. It's okay.
JCI had already said that things were bad. And then I want to combine that with this note that a lot of people are buzzing about the dot-com period.
Oh, yes.
I mean, you know...
Scott Downer says, is everyone cheering that wages are about to reverse? No. Nobody's cheering about wages going down. But what you are seeing is a stock market that is satisfied about a lower rate of wage growth, right? So instead of wages going up 5% a year, maybe going up 3% per year. That's sustainable. 3% a year, by the way, is sustainable. And that's above the rate of inflation. That's good. You know, you want inflation at like 2, and you want wage growth at, say, 3. Very simple. Okay? Nobody's cheering about that. However, the stock market is, and this is where you're more right, the stock market is cheering layoffs, usually. Now, UPS is down, but they're also down because their forecast sucked. So it's a little hard to see, but usually when a company cuts, their stock goes up. However, before they even announced the layoffs, their stock was already falling because their 2024 revenue came in at, estimate came in at 93.25. Do that right? 1.25. Yes, I did. As opposed to the 95.66 expected. I put that on eHack, by the way. Yes. So, cost of living index, real inflation. Yeah, well, just remember, like, there's a difference between what's actually happening in the world and then the data that moves the stock market. Let's see. Hustle show. Tesla 128.83 again before reaching 300 again. Explain your opportunity cost while waiting. The hustle show. You invested in a stock that's down, sir. Now, go back into the history and tell me about opportunity cost. That's hustle show for you. That's kind of entertaining, actually. Layoffs for 3 years in a row. Welcome to Buy Now. I am. That is actually something that does highly concern me. That you end up having a very long cycle of layoffs, and this, like, it will. If we dodge a recession, you know, by a little bit, which we may, given all the like deficit spending that's going on, we are still going to be in a place where a lot of people are suffering, and specifically, you know, the lower 50% of income earners, of wage earners, and it's terrible. So I think the layoffs will be pretty bad, and that will lead to a lot of rate cutting. But unfortunately, we don't know if that rate cutting will come soon enough to save those folks, because there's a lag between rate cuts and you know, when people start benefiting again. And Kathy Wood says it's already way too late. The Fed's gone way too far. She's very, very nervous about Jerome Powell. She doesn't like Jerome Powell very much. Anyway, so what else here? Government the only one hiring? Government and healthcare. Yeah, government and healthcare. There's quite a bit of that. I just had to lay off 30 plus people after and only had 100 people in total. Wow. I like stock. What business is this? And yeah, I mean, that's substantial. I'm assuming the extra weight of that work just falls on the other folks, or is it that the level of work has actually fallen? That would be very interesting. Kevin, bring up that chart again where the market crashed when markets are cut. Oh, well, we have to find that. But I know what you're talking about. I could find that pretty quickly. This has to do with Fed pivots. And we've made so many videos on this. It's the Fed pivot versus U-turn argument. You can actually probably just find it on YouTube. If you just go on YouTube and type in Meet Kevin, Fed pivot versus U-turn. It's very nuanced, but the gist of it is, why is the Fed cutting? Is the Fed cutting because we're going into a recession, or is the Fed cutting because inflation is gone? Right? So there's some real challenges there. Another video won't hurt, will it? Yeah, I'm down to do another video on that. Volume just went bye-bye. I think UPS and USPS still have some of our volume. Yeah, that's true. That is very true. Yeah, so I mean, like, if service income goes down, or just revenue, whatever goes down, obviously then you need potentially fewer employees, right? So that's the way it works. Yeah. Oh, by the way, have I mentioned that we have an expiring coupon code tomorrow for the courses on building your wealth? The gold courses. Tomorrow's January 31st. I've been talking about that one for about 2 weeks, but I've been pretty soft about the pitches. You know, mostly because people are like, all right, Kevin, just mention it once, and that's good enough. MeetKevin.com. All right, great. How many people has Kevin laid off this year? 0. Well, if you like I had to fire 1 person, but they were in a 2-week trial period and they didn't make it. But all of our interns got permanent positions, and we net added way more positions than I thought we would. We're probably about to hire more. So, let's see here. All right. Let's get into more news here. So we talked about JP Morgan and the dot-com style concentration. They see this as a clear and present risk for the market, although they don't argue that, you know, the other, say, 90% can actually catch up. Okay. German sees millions of dollars in Bitcoin. Dear Lord. Okay. JOLTS data today. Oh, yeah, we were going to look at the eco, what's coming out here. Okay. Why did the 2-week person get fired? Okay, that's a very good question. So I'll give a very, you know, streamlined example. They had certain tasks to complete. Then we reviewed the tasks because they were remote workers, so you have to. And the job wasn't even close to done. At least what was expected for that 2-week period. And then we decide, okay, well, let's look at least what was done. And we're looking at this like 1990s, like archaic code base with security flaws in it. And we're like, this is the opposite of what we were told we were going to get. So clearly, this was also not a trainable position because they were coming in as somebody who purported to be an expert. So they are no longer here. But a good question. So let's see here. Mitch, you guys are talking about inflation. Oh yeah, let's see how SoFi is doing today, and then the economic calendar. So okay. SoFi. Let's see how they did. You don't like 90s code. What was it called? Coders would know this. It was for customer accounts. What was it? I think it was, I can't remember what it was called, but it was using like MD5 cryptography or something like that, which I think was like an early 90s technology. Or like, this ain't gonna work. Anyway, getting too nuanced here. So, vintage code can be cool, but when you're using it for cryptography, it ain't gonna fly. Okay, so where were we? Okay, so eco. I keep getting distracted from the economic calendar. Okay, so yeah, see, there you go. MD5 LMAO. It's cracked. Never use it for security. Thank you. Okay. So, okay. S&P prices just came out for month over month. 20 city average came in at 0.15 versus the 0.5 expected. Whatever, volatile on the month over month. Year over year, 5.4 versus the 5.8 expected. These are the S&P CoreLogic home prices. And yeah, that's actually all we have right now. Now we're waiting for JOLTS. JOLTS will come out in about 45 minutes. We'll probably keep going on this stream until JOLTS because I want to cover JOLTS. And then we'll do the course member live right after that. So again, JOLTS, we're looking at 8.75 with a prior release of 870. 8790. So looking at about a 40,000 cut in the job openings, I think that's wrong. I think you're going to see a 400,000 cut. So my prediction is a 10x. I'm going to write down my prediction. Okay, JOLTS. Okay, we're going to write this down. And we're going to say the estimate, and we'll drop that on eHack really quick. So again, the estimate, you could write this down too in your own prediction. 8750K jobs versus 8790K prior, 40K decline. And then I'll put, I believe the decline will be 400K. 10x, baby. All right, where were we?
Dealers are saying, hey, we need hybrids, not pure.
Oh, CEO of GM's coming up. Ooh. She's leading the EV revolution, don't ya know?
Really in love with them. But I've got to tell you that this says, hey, you know what? We can make the cars people want with huge gross margins. And this is a rather exciting time. I mean, GM and Mary Barra is saying this is their year to execute, and I think it's going to be.
That's such garbage. Okay, it's such bad garbage. I have to click away. But probably all the autos will start doing better because it'll be easier to sell cars as rates come down. So UPS down 5.7%. Again, that's not an earnings miss. I don't think that's on layoffs. It's on an earnings miss, on a forecast miss. And, when you get that revenue miss, you end up laying off. So when you get layoffs and a beat, the stock gets really happy because that margin's going up. SMCI really kicking butt over here, up about 9.3%. Major beat yesterday. I mean, I think one of the numbers was like 10 bill. It was supposed to come in at 14 bill. It reminded me of NVIDIA. And, they do data centers and servers and that. We've analyzed them before, and I've liked them. I have not invested in them. But yeah, fiscal year revenue. Oh, yeah, here it is. Expected to be $14.55 billion next to 14.45. No, what's the midpoint of that? Why is this so hard? Divided by plus 14. Okay, 29. Oh, yeah. Oh, I had it right. Okay, 14.5. It's too early, folks. Anyway, so SMCI, a $14.5 billion 2024 revenue estimate. And they had previously estimated $10.5 billion. So you're literally underwriting a beat of 10.5. You're underwriting a 38% beat. So, the stock being up 9%, almost feels like the stock's not even giving the full joys of that forecast beat to the actual stock.
The sixth record close of the year, and of course, that close above 4,900 for the first time.
Ooh, Kenny G from Citadel's coming. Fun. All right, comparing top 10 stocks to Tooth.com. Bubble. JPM very concerned. Boom. Oh, I have a call with JPM today at 8:30. Let's go. JPM does our house hack credit line, but then we also have some other things going on with them, which is very exciting. So, shout out to JPM if anyone's watching. Okay, so, are you ready for the bell? Bro, I got 9.5 minutes, man. In terms of gold, the S&P has not hit an all-time high. Yeah, I actually agree with that, but you can also use the dollar and just inflation adjust it, right? And that's generally what I like doing. So you go in here, go to the week chart. Here we go. Get your little Nike swoosh set up over here. And then what do we got on the SPY? 469? 469 times, throw in 30% inflation. Bro. 609. What are people going to do? I really want to know. What's going to happen? Just if, okay? Speculate on this, okay? It's like October, and the S&P 500 is at 609 because the rally's broadening out, okay? So the S&P, the SPY, is at 609. It's up another 120 points from where it is now, ish, 118. And people are losing their jobs, and it's going into the election. People are going to lose their minds. Anyway, did I cover crypto yet? No, we should do that. There was a... Let me hit. Where was the... I want to see what happened in Germany really quickly. Germany. German police. Die Deutsche Polizei. German prosecutors provisionally seized nearly 50,000 Bitcoin worth about $2.1 billion as part of an investigation into what they see as an illegal file sharing platform. Sorry, that's my annoying German voice. Largest amount of Bitcoin ever secured by law enforcement in Germany. 2 suspects in the probe allegedly acquired Bitcoin with the profits of a German file sharing program operated until 2013. Wow. Wait, that's 2.1 billion. Oh my god. Wow. Yeah. Duh. 2.1 billies. Oh my lordy. Well, they're gonna have to dump that. Oh boy. Aufmachen! Yeah. That's funny. Ist mir scheißegal. Here's somebody who just does not care about crypto. Do you have Starlink on the plane? You know, I paid for Starlink already last January, and they told me it'll be available soon. Make sure you send your whole deposit so you're in line and nobody gets in line ahead of you. And then I asked them, you know, even like this month, I'm like, hey, it's been a year. You said you were getting close. And they're like, yeah, by close we meant next year. So now I have to wait yet another year. So it's on Elon time. Elon time for Starlink. Yes. Coming soon to a home near you. Whatever. Classic Elon. I know, right? I should have known. Should have known. Anyway, here's Tesla 2.3. How's Tesla? All these people are into like this Tesla thing, yield strategy or whatever. This was the ETF that sells calls. I don't know, man. People are so excited about paying taxes on yield for some reason that they invest in this. But the suckers vastly underperformed Tesla. But whatever. So, okay. Mixed. What next? And anything really heavily moving here? Oh, let's see BTC. BTC. What are the chances? No rate cuts until post-election? 0. Like, and that's not me saying it. The chances of no rate cuts by November, let me tell you. Okay, wait, what day is the election? Election day 2024. November 5th. The Fed has a meeting 2 days later. That's actually funny. Okay, so by September, the chances of no rate cuts are 0. The chances of just one rate cut by September are 0.2%. The chances of 2 rate cuts by September are 2.8%. Now, rephrased another way, the chances of 5 rate cuts by the election, 99.4%. Wow. 5 rate cuts by the election is at 99.4%. Man, this curve has changed. What happened? So what's December? Oh, wow. Boy, the market's pricing in more rate cuts. So there is now a... Let's see here. 36% chance of... How many cuts is that? 5, 6, 7. 36% chance of 5 rate cuts by December. Or sorry, for 7 rate cuts by December. Woo! Interesting. So yeah. Anyway, to be clear, at least the market bets right now are 0. 0 chance that there won't be rate cuts by then. Anyway, okay, cool. We've got market open coming here soon. Yeah, the entire thing is staged to get him elected. Oh no. Oh no. A lot of people say this, that Donald Trump might fire Jay Powell, so he's got to cut rates to keep his job. That movie Inglourious Bastards is amazing. Yeah, calendar on eHack would be cool. Also true. This idea of like 7 rate cuts, it's only, you know, whatever, 25 bips times 7, 1.75%. It's true. It's not actually that big of a deal, right? Like, I personally think they might start going with 50 basis point cuts. So it's not really about the number of cuts as it is the magnitude. Insider information of the jobs report. Every time you speak German, you remind me of the movie Inglourious Bastards. I'll never forget that scene in Inglourious Bastards at the movie theater. Like, oh, you know, what does he say? Something to the effect of like, we're in it, you know, now I'm forgetting the exact details of it. But basically, you've got they're in this position where they're supposed to speak Italian. They goes, buongiorno. It's like so broken. It was great because they didn't expect the German guy would speak Italian as well. That was fantastic. We gotta watch that again. I'm watching The Reacher now instead.
Well, it's interesting. A washing machine versus a Vision Pro. Well, how do you like that? Vision Pro's selling better than a washing machine. I think that this is something that when people see it, if they go, and if they get the tutorial as we have had, I think they'll just say, you know what, I've got to find the time to use it. Do people have the time to use it? You know, I'm watching Killers of the Flower Moon, which, by the way, I love. And it's a long time. Then I find myself saying, maybe I should wait until I have this device. Because, like, I think that it's otherworld. I watch it with my sister up in
Yeah, I'm going to have that, by the way. I'll make some review videos on it. I think that comes on Friday, so, you know, maybe I can crank one out Saturday or something. But I'll let you know what I think about it. Now, who knows? Maybe it's just all fugazi.
Yeah, headset.
You and I are arguably pretty jaded when it comes to any kind of sales pitch. This is eye-opening. To wear it is eye-opening, for lack of a better word.
Yeah, I mean, there are very few things that I go in and totally jaded. I mean, I was like, all right, I'll go see the Viewmaster, a picture of the Grand Canyon. And I come back and I say, okay, I've seen the future. I never thought this would happen. It reminds me of the 1964 World's Fair when I was a little boy. And they had phones where you might see each other. Like, we're all laughing. Yeah, please. It's like the 64 World's Fair, which was a moment in time that said, look out. Digital is going to come. We didn't even know what digital was.
All right. It actually looks about 70% red. Somebody here just wrote, the Fed meeting was moved from November 5th. It's the only meeting being held on a Thursday. It's interesting because they started on Wednesday and then finished it on Thursday as opposed to the normal, which is started on Tuesday, ended on a Wednesday. So the Fed meeting actually begins today and will take, tomorrow will basically be the Fed presser, which of course will be covering the Fed presser tomorrow. That'll be really entertaining. So anyway, Tesla, we got a nice little red candlestick off the bat. Red candlestick on NVIDIA, red candlestick on AMD, further red candlestick on UPS. Green on SoFi, over $9. Hey, it's above that $8.90 level. That's great. Let's see how long I can hold on to that. This is the eve of Fed Day. Trying to go green here on the Qs. You've got ASML. Boy, this stock has absolutely destroyed. Great job. I mean, so is like NVIDIA and basically all of these AI-related and AI adjacents. Meta and Microsoft, green, but Microsoft's trying to go down. You've got Coinbase trying to figure it out. Enphase trying to figure life out. They've been trying to figure it out for a while. What else? Let's see. Apple still sitting at 191. I feel like they've been range-bound here for a while. Let's just zoom out. Remember, folks, JOLTS data coming soon. Wow, look at that perfect double bounce on 181. If you don't have that line set up for Apple, that's a big deal. Breakout's going to be $200 for Apple, I think. You got to get that 200. 200. You've almost got like what looks like a triple top here at 196. Oh, they can't even get it up over 196. So interesting. Okay, I think our biggest mover today is UPS. Oh, and Supermicro, that's right. Supermicro on the upside. Spirit Airlines been sort of memeing around left and right. It's been an interesting one. All right, so let's find out what other news we have. I know the big thing coming today is obviously going to be JOLTS data. JOLTS data will be a big deal. That'll be out shortly. We do have bond yields falling 4.2% right now. We're down at 4.049 on the 10. If we look at the 10-2 inversion, that's going to bring us to negative 25.6 bips, sitting down 2.1 on the 2-year. And CNBC is running an article, Apple Vision Pro preview. This is the future of computing and entertainment. That'll be interesting. Well, I'll let you know. I'll have it Friday, supposedly. Let's see what they actually say. Quest 3 and other headsets also have pass-through, but the Apple pass-through works better. It's clearer and sharper. So, enough so that I can comfortably see the room around me in full color without any lag, though I still can't read my phone. Oh, that's interesting. But you could put your phone screen, you think you can sync your phone screen up so it actually shows up on the display. Virtual travel is nice. Navigation is easy once you get a hang of it. I got a keyboard and mouse, well, touchpad for mine. Actually, I think I have it, like right here. Not that it really matters. I don't need to get it. But anyway, mostly because I think the whole, like, pinchy thing is just going to be stupid. I launched more than a dozen apps around me. There's no point in doing more because you can't see it all. I loved setting it up with the browser in front of me, music next to me, TV screen above it. But the world is yours to customize. Ah. Interesting. Well, we'll find out soon enough, I guess. All right. Anyway. So, what else? Do we have their interview yet?
Alex is going to have to make some very difficult calls.
No, not yet. Okay, we'll wait for that. It would be nice for air travel. Actually, that's one of the reasons I got it. Is one of a great employee in the office. He's like, Kevin, you need to get it for the plane so you can have your workstation in the plane. And I'm like, sold. It was that easy. If inflation has bottomed and we enter stagflation, isn't it possible too many cuts are being priced in? And the better bet is to take the under on cuts. Well, I mean, stagflation implies that inflation will return, right? So with that, and I could be wrong, okay? I could be wrong. But I'm still going to fight because I don't think I am. Where is the inflation? I will tell you where the inflation is. So that way I want you to be aware that I also recognize the other side. AI chips. Some lingering inflation at ski resorts. The lagging inflation of insurance. And aerospace across the board. That's it. But that's it. That's not the entire economy. So, tell me where else the inflation is. And maybe I'd remotely consider this stagflationary argument. But the problem is, it's just, I just don't see the data. So, all right. What else? Oh yeah, we have earnings today. Ooh, maybe we should go live for the close because we have Microsoft, Google, AMD. Ooh, those are going to be pretty cool. We should probably do that. Those are going to be pretty big earnings. And then obviously we have JOLTS coming up. So JOLTS comes out in 23 minutes now. And so that should be pretty entertaining. Entertainment is for fun. Stupid. Okay, good. They're supposed to have an interview here in a moment.
Rates went up very big during this quarter. Look at it, doesn't seem to matter. Now, they've held the line in pricing, and they're very, very good, very good company. What's amazing is that they were buying back stock when no one liked it. Still sells at 9 times earnings. I know Toll Brothers feels very, very aggrieved that their stock sells at 8 times earnings. Now, they don't report until 2/21, but I think they could have an amazing quarter. Toll, amazing.
Pfizer, of course, the challenges there, Jim, have been pretty well telegraphed. They do reiterate the guide, talk about the challenges there. Stock is higher, but obviously nowhere near retracing past 52 weeks.
You know, here you're making a bet that CGen is going to deliver on some very critical cancers that people have had very little luck on, and I'm with Dr. Borla that could happen. This one actually seems attractive to me. I saw, by the way, the Nurtec numbers, which is the migraine drug that I'm
You know what doesn't cause cancer, supposedly? Fruit. Lots of fruit. I just OD on fruit every day. It's pretty fruity, man. So, all right, let's see what's actually happening in some of the underlying moves here as we wait for JOLTS. So you've got AMD trying to run up. You've got Tesla trying to run into the toilet. It's not a surprise. Bitcoin sitting at 43.4. It's above its 42.2 level, which is great. So you're finally getting a reversal of the post-ETF sell-off. UPS dropping now down 7%. NVIDIA's net up here. SMCI is giving up. You know what's funny? Part of me was looking at this yesterday, and I'm like, hey, you know, the earnings came out here. Does this mean mostly retail was betting on this? How stable will this be when institutions bet? I don't know. But I'm going to watch SMCI today for that reason, because, you know, it was basically until CNBC announced the earnings, not when they were actually available, that the stock went up, which is very interesting. So, how do you get fatty liver from fruit? Fruit has too much sugar. I don't see, but I disagree with that argument. And yeah, fructose is in fruit, but it's like fiber and water packed. It's like this healthy envelope of delicious healthness. Okay, cool. So Q's still negative right now. It's actually trying to trend up. It's just going to be JOLTS. Just wait for the JOLTS. And that's going to decide where this market goes today. So I wonder what volatility. Let's look at what the VIX is today in case there's like an option play. Okay, so let's go out on the day chart. Interesting. Look at that trend up we've had on the vol. When did I have this long-term downtrend? Oh, interesting. So here we have this long-term downtrend inside the channel. But boy, that's really narrow. It's tightened up over here from both sides. Thank you, Dietitian Jack. Okay, cool. So yeah, Tesla down down under 1% now. Gotta get the JOLTS. All right. What else? Let's see what some news here is. Okie dokie dokie then. So Lamborghini is sold out. See. Yeah, that's interesting. Lamborghini has sold out of supercars until 2026 as the wealthiest consumers show little signs of a broader slowdown. Why does that not surprise me? Is that still like a thing? Like people wanting Lambos? I thought that was like a guru fad or something like that. Lambos sold out until 2026. Sold 10,000 cars last year. And I guess they have a plug-in hybrid. I did not know that. A plug-in hybrid. It's called the Revolto. That's kind of a cool name, actually. They would try to use a name like that. Yeah, it's right on point with the brand. A revolt. Revolto. It's got to sound Italian. So what are you going to do? You're going to take the word revolt and then make it sound Italian. Revolto. Because you're a rebel. You're getting a plug-in hybrid. Oh my god. Marketing. Oh, man. Okay, U.S. job openings likely held steady. Well, I know that's the estimate. We expect that the number of job openings largely held steady in December. Together with an increased pace of hiring, it would seem to indicate a hot job market. But the labor market has been cooling more than headline data have suggested, with acyclical and countercyclical industries serving as the primary source of job openings and hiring. Fine, whatever. With a decline... acyclical would be something that's always hiring, right? Potentially like healthcare. Counter-cyclical would be, okay, like manufacturing is going down. What might be going up? I don't know. Maybe like AI chips. It's just an example. But, so what else? Bottom line, with quits falling, the elevated level of job openings might not translate into hiring. And there's less need to fill openings because of fewer quits. Right. Quits rate should be subdued. Well, we'll see. Healthcare social assistance will likely remain the primary source of openings. Yes. Yes, we know. Brandon, I agree. Eat as much fruit as you can, and please stop the insanity of thinking fruit is bad for you. And keep eating my seed oils. I just like olive oil, okay? You know, they always show crazy stuff at CES. I remember being in 5th grade. In 5th grade, they're talking about we're going to have flying cars in 10 years. We didn't. Yeah. Teacher had a poster of that up. Everyone's like, oh, it's going to be so cool. We're going to have flying cars in the future. Oops. Avocado oil for high heat cooking. That is true. Substantially higher flash point, especially compared to extra virgin olive oil, which you probably shouldn't cook with at all. Morgan Stanley turns bullish on U.S. banks. Morgan Stanley analysts are turning bullish on major U.S. banks. Expectations of regulatory changes for higher capital requirements that will be less onerous than expected. Fascinating. Okay. America is subsidizing Iran's fight against America. That's an interesting argument. How do they make that argument? Iran. Oh, okay. Boosting oil production. Probably because, okay, let's see. Sanctions on the particular countries are allowing them to sell. Let me see. Iran likely pocketed a non-trivial sum of more than $10 billion last year due to higher oil output. The extra money is bankrolling the country, by extension its proxies, Syria, Iraq, Yemen, Lebanon. Now, it's always oil. It's always oil. Oh, nobody said olive oil's bad. Olive oil's great. All right. It's turned into a diet channel. Meat diet. Oh, the irony of that name is actually great. Unless you want to be like an all-meat diet. Anyway, UPS still down a chunk here, along with HUD 8, and, which is interesting because BTC's up. Roblox, boy, Roblox is not... When is Roblox actually going to, like, come alive? All right, let's look it up. Let's go into the Roblox investor relations. Let's go see. Roblox financials. Roblox quarterlies. Let's get into the last quarterly from them. All right. While we wait for JOLTS, let's go take a peek. Balance sheet. All right, here we go. Loss from operations, $300 million. Bro, how did you lose just as much money in 2023 as you lost in 2022? Oh. Meat hacks, diet hack, fruit hack. Yeah. So total costs rose a little over 20%. Revenue did increase. You've got revenue up 39%. I'll write down a little summary here. Roblox revenue up 39%. And then okay, yeah, here we go. So 39% increase in revenue. Cost of revenue, so this will help us understand their margin a little bit. 163.5 divided by 126.4, 29%. So that's good. But developer exchange fees, 150, and that went up about 13%. That's actually not that bad. Infrastructure and trust and safety, well, that went up quite a bit. That went up about, well, it's 14%. Actually, that's not that bad. What is that? R&D. Holy smokes. Why did R&D go up so much? What did they R&D? 30%, 36% increase in R&D. It's quite a bit. R&D spend up 36%. Sales and marketing didn't move too much. Loss from operations flat. So how do you grow this? I mean, if you're growing the top line at 36% and your margin isn't moving, I wonder if that's why the stock isn't moving here. Unless there's some one-time here. I mean, they have money. We've got 2 billies here of cash. 2 billies of cash. Long-term debt's a billy. Bills payable. Deferred revenue doesn't matter. Payables, expenses. I mean, they've got cash. They can survive this. And I think most of their expenses are, quite frankly, stock comp, which I'll find out right here. Stock-based comp, there it is, 617 millis. So they're actually operating positive. So they're not going to go BK. No BK here, but you know, I guess it'd be nice to get to some EPS. But operating cash flow. Oh, but then operation of plant, property, and equipment, 255. So you're really at, what is that, 314, 875 minus 255, 470, 59.4 of operating free cash flow, $59 million. But the stock's been flat for so long. It's crazy. Oh, well. All right. What are we at? We are at 11 minutes. 11 minutes from data. CNBC talking about Musk. No, CNBC ain't talking about none. Must have missed it. Doesn't matter. We're waiting for, I think, Mary Barra coming up. Okay. So, let's go right here. And phase doodles. It's up 1%. Roblox down 3. That's just, look at that. Just shaving off right now on Roblox. How unfortunate. Tesla rotating back up. 1.6. AMD. Oh.
Lost the lead.
Nvidia. SMCI 4. Wow, they are giving up their gains. I'm telling you, I was literally sitting there yesterday, and I'm like, why is this sucker not going up? 3 minutes later, CNBC talks about it, boom, it's up 10%. I'm like, are institutions not into this stock? I don't know. I don't know. I don't own it. I don't have a horse in that race, but it is very interesting to me. So to see it shaved down like this. And the other chip ones? I mean, Nvidia, AMD was trading down. UPS is just getting burned. 8.6 to the down. We go to the day chart here. What do we have? Well, this has been a downtrend, huh? I can't even draw a clean downtrend on that. It keeps getting worse. Do you even have a floor? Let's see. Yeah. No, that's not too useful there. I'll keep it like that. And then you have, I mean, this is, we've seen this of many stocks. Tesla's no different. It's probably better like that. Yeah. Interesting. Oh, well. How's Amazon been moving? With their palm scanning technology. Interesting. Local bottom, yeah, December of 22. Straight up since then. Yeah, good for them. Alibaba still negative. K-Web, I think, was also negative. 8 minutes to JOLTS. Yeah, 2%. Your opinion on Starbucks? Oh. So, I don't... Look, I wanted to buy Starbucks because I was noticing that they were exploding their building in China. Double their stores in China. So I'm like, this is great. I mean, come on, they're like the definition of pricing power. They're selling you black coffee for like $4. It's insane. But the problem is, where? Where is the problem? And China is a heavy portion of where they're expecting to grow. And I cannot bet on China any more than having exposure via, Nvidia or Tesla or Apple or whatever. Starbucks, in my opinion, is too much of a bet on China at this point. I saw this great Twitter post, X post. Somebody's like, if you ever go to Italy, make sure you go to this classic local coffee shop. And there's this giant line outside, probably 20, 30 people in line. And then you look up and it's Starbucks. And it wasn't even AI, because you could see like something AI could have never pulled off yet. On the side, you could see some of the logos on this, like the labeling on the side of the building. But yeah, I mean, I've also been there and can attest to that myself. But yeah, it's pretty powerful across the world. But in terms of just betting on China for Starbucks, I'm not optimistic about that. I have no idea what their expectations are, though. Yeah, I still think they're a buy, under 80, but they're like 90 right now, aren't they? Yeah, they're 93. Like, I want them under 80. Yeah, I mean, where they were over here. But then again, at the end of 2022 or mid-2022 to the end, everything was cheap, So it's hard to be like, oh, well, you should have bought Starbucks there. We're buying, everything else there. But, yeah, they do have earnings today. Their expectations are 93 cents adjusted EPS, 95 GAAP EPS, revenue of 9.6 billies. I wonder if I can get a forecast on, probably can, if I can get a forecast on China specifically. And so I'll go into, oh yeah, I can. Okay, quarter over quarter growth. Let's see what the estimate is. There's no way. 16% for China? Nah. I don't believe it. Don't believe it. The last quarter was 5%. The quarter before that was 46%. That's nuts. Before that, it was 3%. Before that, it was negative 29%. Before that, it was negative 16%. Before that, it was negative 44%. Before that, it was negative 23%. Before that, it was negative 14. Before that, it was negative 7. But then again, you get into then you're getting in 2022 when you had lockdowns. So maybe that's not fair. But still, 16% China? I mean, hopefully they pull it off, but I don't think so. Top line growth, North America, you're looking at 5.5% growth for US. I guess we'll find out. But those are the estimates right now. Who uses PayPal anyway? I like PayPal. Everybody poops on PayPal. Boy, they've been crappy. I think I like 1% PayPal. It's like the dead dog you're poking. Come on, buddy. Come on. Oh, that's sad. Don't ever compare PayPal to a dog. But no, I mean, I think their acquisition of Venmo is brilliant. It's way better than Zelle, in my opinion. More people coming off the sidelines in housing, believing rates have peaked? It's a very good question. Actually, what I'm seeing more of is speculation that the market's going to explode when rate cuts start. I disagree with that. So I actually think inventory is going to explode, and there are going to be plenty of choices. So, like, I'm seeing what people are paying right now for projects, and it's pure speculation on the spring. And I'm like, this is, like hard R stupid. It's like, it doesn't make sense. And this is happening in multiple different states. I'm like, boy, I can be patient with money. But there are also really great deals we're finding in multifam. So, but you have to be careful how you're underwriting multifam right now, because rents are coming down. So you have to be careful. And if you can find sellers with NODs or whatever, notice of default, there's some probably opportunities there. So you do have to be a little careful. But it's fine for house hack. This is fantastic for us. But, I love real estate. It's my little baby. All right, come on. Give me some data. 3 minutes. Let's go, data. Let's go. All right. Results. Okay, so we're going to be looking for, it's just basically one number. So we'll see what it is. Okay. Prices drop in real estate in summer when more inventory. I don't know about that. I think relative to January, I think January comps could be high, yeah, but not necessarily year-over-year declines. I'm from Canada and we renew our mortgages with 5 years. We're all getting slammed. Yes. So the Canadian real estate market is not insulated by the 30-year like America is. And so, yes, the Canadian real estate market has gotten wrecked relative to the U.S. real estate market. This is correct. Christelle is correct. Anything positive to look forward to in end phase? No, don't buy it. Sell it. It's trash. Not financial advice. So I could buy more. It's just a play on interest rates, man. Rates down, end phase up. Should be. All right. 1 minute. So many Canadians here, eh? All right, here we go. 1 minute. 1 minute to go. Then we will know. You realize no matter what it is, the more important catalyst is the Fed tomorrow. But for trading today, the JOLTS number will be fun. This should be very entertaining. Let's pull up the cues. If it comes in at match, the stock market's not going to move. If it comes in with a 9 handle, the market could go down because we're going to immediately start unpricing March cuts. So I do not want a 9 handle. I want 7.9 to 8.3. That's what I'm going with. I think 8.3 is most realistic, but a 400K drop. Here we go. And the number is 9.026. Damn it. There's your red candle. 9.026. 9.026. How? Okay, well, it is what it is. So you're going to get probably a slight adjustment down on the expectations for rate cuts. So that'll hit the March rate cuts. You'll probably go from 50-50 down a little bit. Obviously, there's your red candle, as expected. Kevin was wrong with where I thought the number would come in. I'm shocked by that. Let me look at the prior revision. Oh, wow. The prior was revised up as well. That just absolutely blows my mind. Okay, geez, Lord. And then prior was 8790, revised up about 200K, 8925. Wow, that's crazy. Okay, I don't know where all those job postings are because I keep seeing layoffs, but wow, that's JOLTS for you. We did also get consumer confidence coming in at 114.8, which is on expectations. Conference board present situation 161, way up from the 148 we had prior. Consumer board or conference board's expectations. Okay, whatever. So JOLTS, baby. Wow, that's crazy. Did they cover it here?
They're all higher. What's not energy?
No, they didn't really explain. Okay, explain it. I mean, what there is to explain is there are more companies posting job openings. That's what there is to explain. It's more companies are like, yeah, I'll hire. Come on, man. I thought it was going to be the only one. Because we're like, yeah, send us emails to jobs@meetkevin.com because we're going to post job openings soon. You know, send your resume or whatever, and we got to go through them all. But I'm like, we're going to be able to buy because everybody's getting laid off or you know, hire people. It's like, damn it. No. So anyway, 10-year Treasury yield now up to about 4.76. That is a little bit of a change there from the 4.04 we had.
Shares of JetBlue and Spirit Airlines moving big time. They are now filing for an expedited appeal to that court.
Okay, there's Sarah. Everybody loves Sarah. Anyway, there's your drop in the NASDAQ. You can see, I mean, we dropped heavily there on that JOLTS data. Again, you've got to unprice rate cuts, right? So slightly unpriced. Yeah, look at that. You got the Tesla drop here. You've got, it's not that bad because again, it's going to heavily rely on what the Fed says tomorrow. Enphase actually did not move on that. That's crazy. That's wild. Okay. That's definitely an interest rate sensitive stock that did not move on an interest rate event. So that's odd. Either not traded enough or what. Let me see what the suits are saying really quick. It's literally your fault for hiring all those interns. Enphase is unfazed. Oh, y'all got jokes today. Yields down after job openings surprise. Labor market remains strong. Yields are reacting as you would expect, reverting earlier declines. This should support the dollar. More question is how stocks will react. I mean, this, I have to say, I mean, and I hate to say it, but I have to say, it aligns with Atlanta Fed's GDP. Would Meet Kevin be a better president than Joe Biden? Nope. I'll just play video games all day long. We are hiring right now. I haven't played games in a while. Although I did play a little bit of Plants vs. Zombies with Jack yesterday. We are hiring right now, but at a 10 to 15% cut in pay. And getting better apps as we're able to cut costs and upgrade employees. Nice. ADMA. I don't even know what that is, man. Oh, these bio companies. Come on, man. Market cap 1.2 bill. There. I don't know where to start with bios. Anyway, so what was I going to look at? I don't know what I was going to look at. Doesn't matter. All right. Did we hire a software engineer? We did. Yeah, he started yesterday. He's great. Oh, look, we got Anger. Look at this.
Adjusted was the best level.
Boy, they're late.
22. That's good news. Sarah, back to you.
All right, Rick
He's happy because rates are going up. It's so obvious. Every time yields go up, he's so happy.
pays attention to it as it relates to the tighter labor market, and it shows just the availability for workers continues to be strong, and the appetite continues to be strong from big corporations. I'll just add to the good news from the IMF this morning. We got the World Economic Outlook.
GDP.
They update this quarterly, and it was actually an upgrade for the world economy from where they were last October. 3.1% growth is what is expected globally now for 2024. And that was a little bit higher.
Yep. Would I hire somebody who doesn't have much experience? We'd hire interns again. Yeah. So, like, if you want to be an intern in property management, real estate, editing, programming intern, like, usually. So what we do, just to be transparent, is we go, like, we start you out at minimum wage for a year. Sorry. And you prove yourself. And everybody that was an intern last year now makes over 6 figures. So that's just the way it works. If you can't suffer it for a year, sucks for you. It's a California minimum wage, though. So, you know, it's actually not that bad. Anyway, so latest estimate here. So this is what I was going to say this. Anyway, that's jobs@meetkevin.com. But anyway, 3% is the Atlanta Fed now real GDP estimate. And this aligns actually with this job openings number. I'm telling you, it is shocking how strong this economy is. And like I'm watching the layoffs roll in, but with these job openings, it just implies they're just going to get absorbed. Crazy. Crazy. So, what are you going to do? I'll tell you what I'm going to do. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yep, keep in mind that the market's already starting to try to recover on that JOLTS number. And yeah, I mean, look at that. I think it's kind of like there was a shock at the party, and everybody's like, oh, and that's not that bad. And then the party keeps going, I don't know. We'll see. I think that'll be determined by JPOW tomorrow. So we'll see. Anyway, you're going to get a redirect link for the stock market close. So if you want to be part of the stock market close, just click the redirect link. Hi, Kevin. Can a German on German ground work for you? Well, that would be remote. So no. There's no such thing as remote work. I'm just kidding. I know a lot of people here are remote, and that's fine. That's fine. It's just not for Kevin.